Hello everyone, thanks for joining us today and welcome to this educational presentation of the simplest way I know to trade with the trend. Now we've all been taught that Trading 101 says you're always supposed to trade in sync with the trend. That's where the high probability trades are. The only trouble is there are 1,000,001 ways in which to trade with a trend, and I think that's why most traders fail. For example, if we look at this example right here, we see in ABMD, a lot of traders like to use some type of overbought or oversold indicator or tool to tell them when a trend is about to stop and a new one will begin. As we see in this overbought, oversold tool here, when we get into the so-called overbought area, that's usually where the uptrend ends and you want to sell because that's the beginning of a downtrend. And as you can see, that worked very nicely. We went down for a little bit. And then when we got in the so-called oversold area right here, well, this is where you want to buy because this is where the downtrend ends and then the uptrend begins. And as you can see, that happened very nicely as well on the short term. But as we get back into the so-called overbought area, you decide, well, this is just too easy. I'll just keep doing this all month long, and you decide to sell again, and then this happens. So there are a lot of techniques out there for trying to find and to trade with the trend, and most of them are faulty. But I'm going to show you the simplest way to trade in sync with the short-term trend, and it's something I've been using for going on 4 decades now. So welcome to this educational presentation. Promises to be a good one. My name is Primo. I'm the president and founder of Specialist Trading. I've been trading for 4 decades now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. That's a specialist where you just make markets in roughly 50 or 60 stocks. So that's where I picked up most of my techniques for trading and most of the things that I personally have learned, because I traded through the crash of 1987 and the bull market that followed. And the things that I've learned has sustained me going on for 4 decades now. So about 8 or 9 years ago, I teamed up with Pro Trader Strategies, and all we do is teach and mentor our students around the world in over 110 countries and in virtually every state in the United States, all the different techniques and methods and strategies that I've accumulated. So in my 41 plus years of trading, I know what works in terms of consistency and I know what doesn't work. So once you become a student of mine, you will really shorten your learning curve. You don't have to waste your hard-earned money and your time on things that really show no consistency. And I'll show you just exactly how evident that is in today's educational presentation. But before we begin, as always, we are first required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular technique for trading with a trend. But please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated in the future. And please remember that all examples I'm about to share with you are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, I would also like to invite you, if you haven't done so already, to follow us on Twitter. That's our handle right there. You may want to copy that down. Every day I post new and different information, anywhere from signals that our strategies have generated. In fact, as soon as we conclude here, I'm going to post a great signal in a stock that has taken off roughly about 20 points in the past, I'd say 24 hours, and how many of our signals generated lots of, or many of our strategies generated lots of buy signals prior to that big up move. So we post information like that, as well as little bits of wisdom, financial wisdom along the way. So great information. Feel free to follow us on Twitter. Excuse me. Now, as I stated in the beginning, our goal is not to force feed you signals. Our goal is not to tell you how to trade. Our goal is simply to teach you, because we are an educational company. We're a little bit different from other companies in that we don't promise and report to have some system that generates thousands of percent a month. We don't believe in that. We don't promise to have something that's been back tested 50 years that never loses. We don't believe in that either. We just supply our members around the world with sound fundamental education. And then we teach you and mentor you all of that, the things that I've accumulated in my 4 decades, and then work with you to make it fit your trading style. So if you want to trade conservatively, if you like to trade aggressively, if you like to trade with little risk, a lot of risk, if you like to stay in trades long periods of time, you like to stay in trades for a short period of time, we show you ways in which to do that. We are strictly an educational company. So as you can see here, my goal is not to trade for you, because a good mentor does not trade for you. He teaches you how to trade. I was the same way. I was taught some 4 decades ago, and hopefully I can teach you the same way and have you trading not just for a couple of good years, but 10, 20, 30, 40 years down the road. Now, since this is going to be an educational class today, I do want to take your questions, but we have a good crowd here, and if we stop the way so many other webinars do for every question, we'll be here a good time. I don't want to take your morning. I want you to go back and examine what I've taught you today. Maybe you can start applying some of the techniques. So if you have a question, please wait till the very end of today's class, roughly in about a half hour, 40 minutes from now, and then we'll reserve the last 10 or 15 minutes for questions. The only question I will answer is the most common, and that is this being recorded? Yes, it is. I can see some people are already asking if this is recorded on the question and answer box. Yes, we record all of our webinars, so if you have to leave early or if you're having technical difficulties, many times if you log off and log on, the issues will be resolved. But if you're still having difficulties, don't worry. We will supply each and every one of you with a link to this recording. Okay, so with that said, let's begin. And I want to start out by asking you a question. How does one find the true short-term trend? Because as I stated earlier, every mentor, every educator, every guru on the webinar or on TV has a different idea for trading with the trend, most especially the short-term trend. We're not talking about a trend going back 20 years where it's simple to look back on a chart and you can see monthly bars where it's basically easy to see you've been in an uptrend. We're talking about if you like to day trade or you like to look at daily bars or even weekly bars. How do you find out that true short-term trend? Well, here's what my mentors taught me. In order to trade in sync with the current trend, you need a tool that translates what the market wants to do. See, we focus too much on tools or indicators that predict when the market's going to top, and you can get right in at the top or the bottom so that you can catch the new trend. Or we get involved too many times with indicators or tools that tell us how high a trend will be or how low a trend will be. You see, that's silly because no one really knows that. You know, for every trend that says they know that, they've already blown up many times. So we want something with consistency and something that is actually translating on a tick-by-tick basis for the moment what the market wants to do. So in my 41 years of trading, I have learned that that tool is the Pet D. That is the best tool I know of. It was something that was introduced to me on the floor. And when I first started trading on the floor, my mentors taught it to me as a formula, as a calculation, something that I had to do myself. So we called it the formula. But here's what the Pet D actually is. It's a proprietary algorithm. So in other words, we're keeping it in-house because we're taking all the work out of it for you. We're doing it automatically for you. And the way we're telling you what the short-term trend is by turning it into a color bar tool. Okay, so all we do is simply color the bars. If you see a series of green bars, that's an uptrend. A series of red bars, that's a downtrend. The hard work has been taken out. You no longer have to sit there the way I did with a calculator and a pencil trying to figure this out. Now, there are many uses for the Pet D. One of the standard uses is as a signal confirmation tool. In other words, I don't care what strategy you're using. It could be someone else's. It could be a system. It could be a technique. It could be something that you came up with. We have found that the Pet D works amazingly as a confirmation tool. In other words, the minute you get a signal to buy or sell something, you just want to apply the Pet D and see if the color bar confirms that signal. That is probably its most popular and easiest way to use it. But today we're going to be talking about how to use the Pet D as an early trend detector, because once you know what the trend is, you can apply this specific technique. Let me show you what I mean. As we look at this older bar net, and if you've seen my presentation in the past, you know I've used this example a lot because it exemplifies exactly how well the Pet D works. Usually people will see an uptrend is established, they'll get in somewhere around here, and then the minute they get in, this happens, okay? Happens to everyone. What if there were a tool that could tell you a little bit earlier than most trending tools when a trend was to take place and not pick the top, but give you an early warning as to when it was over? Well, there is. It's the Pet D. All you have to do is apply the Pet D and the colors automatically change. And you can see that you would have known well in advance because you had consecutive green bars that you were going up. And well in advance of the large drop, you had consecutive red bars that we were changing, going down. So it states the beauty of the Pet D is that it tells you which direction you should be trading. Once you know, you can apply virtually any technique to that trading. Any technique. It makes no difference because you will now increase your odds for consistency. Why? Because you are in sync with the trend. Can't think of a better way to trade than to have the current at your back. All right, so what is the technique we're talking about? Well, I'm going to share with you a technique my mentors taught me, something I currently use myself. This is a technique applying the PET-D. I'm going to really share with you how simple trading can be. You see, most traders think that, myself included, when I was first taught, I thought that the most complicated of methods, of systems, meant that they were the most valid ones, meant that they would probably generate the most profit. But my mentors taught me, and I finally have found out that it's actually the opposite. It's the simple things that have the highest consistency. And the most complicated ones are the ones that eventually blow up and don't work anymore because there's just too many rules and requirements to be met. Okay? You want to keep things free, you want to keep things open so that it's just not too tight, so that it's not tight enough to break, it's not loose enough so that you can't follow, it's right in the middle so that you can just be in sync with the trend. All right, so here is the setup we're talking about. Obviously, we want to apply the PET-D. We want the PET-D to be on our charts, and then we're going to be trading based off of a 3-bar pivot high or low. Now, a lot of you are familiar with a 3-bar pivot high or low. Maybe some of you aren't, so let me share with you and exactly give you a refresher course as to exactly what a 3-bar pivot high or low is. This is a 3-bar pivot high. All right, bar number 1 makes a high, bar number 2 makes a higher high, and bar number 3 makes a lower high. So you kind of have this kind of a rooftop look to it right here. Okay, the highest of the bars is bar number 2. What we want to do is apply the PET-D and make sure that all 3 of these bars in the 3-bar pivot high are green. All right, if they are green, that means that we will buy once we trade 1 tick above bar number 2. Now, provided that the remaining bars continue to be green. So in other words, let's say the next bar is just pretty much stays right around where we are. The next bar does too, and finally the next bar does. If they're all green, that's fine. This is still a valid setup. But let's say the next bar here, bar number 4, goes straight down and turns red by the PET-D. Well, then all bets are off. We're not going to continue this technique. So all bars, including the 3-bar pattern, and bars after that need to be green. Same thing works with a short-term, a 3-bar pivot low. All right, bar number 1 creates a low right here. Bar number 2 creates a lower low, and bar number 3 creates a higher low. So you have this kind of a V look to it, all right? What we want to do is apply the PET-D and make sure that all 3 bars are red, okay? It's not just enough to have 1 or 2 bars red. All 3 need to be red because that's telling us that this pattern is in a short-term downtrend. And if we're in a short-term downtrend, then we want to sell once we trade 1 tick below. It's that simple. Now, provided that the remaining bars, the continuing bars, are red and we go below, then it's a valid setup. But if we all of a sudden have 1 bar, the next bar number 4 goes straight up and the PET-D colors it green, well then this setup is negated, okay? And that's it. Now please remember, this is just a technique. I know a lot of you will say, boy, okay, this is really simple, but where do I get out? Where do I place my stop? Or what's my money management? That's all important, and that's all included in the courses. This is just a technique sharing with you an entry point, okay? So this is just a technique, and that's why we say this is not a strategy, not a full-fledged strategy with 3 to 5 rules. It's simply a technique for high probability entering with the PET-D. Okay. Now the first rule, as with all of our methods and techniques, is to stop relying on tools that do not show nor generate any consistency in your trading. So remember, we're not here to tell you how to trade, but we're giving you 41 plus years of experience and advice. So our suggestion, no, not a requirement, would be to get rid of news. There's no reason to look at overbought, oversold oscillators. There's no reason to look at volume. There's actually no reason to look at support resistance. This is silly. Trust me, for someone who's been trading those things for over 4 decades and have been seeing them on a daily basis, there is no consistency in those techniques. So don't waste your time, and most especially, don't waste your hard-earned money. Remember, as I said, trading is really simple. It's us as traders who overcomplicate it, and that's why most traders fail, upwards of 80%, because we're overcomplicating things because we think that that's what's going to make it more valid. It's the opposite. Relying on too many tools that show no consistency, that for some reason have been taught that they're supposed to work, will actually get you closer to losing your money than they will to actually making money. So don't rely on overbought, oversold tools or oscillators, volume, Elliott wave. They're just, too because the word discretionary is the only thing I can think of, because there's a lot of judgment involved. And while some traders, even some traders I know of, do very well trading those things, they're probably about maybe 1 to 5% of all traders. The rest of us, the 95%ers, myself included, have a very difficult time. So let's get rid of that. We want a blank screen here. That's all we want. We want to start chart. Now, the first thing we do, and let me show you how simple this is on a new platform, the PTS Primo charting platform. As you can see, I developed this with Pro Trader Strategies. We have everything one click away. The first thing you want to do is click on the Pet D. All right, that will automatically change the colors. There's no calculation you have to figure out, no formula. There's nothing you have to change because of the time frame or market. Everything is one click away. And as we can see here, we have a series of green bars, a couple of red, and then a series of green bars again. Now, what do we see here in this first series? Well, we have 3-bar pivot high, high, higher high, lower high. So that is a valid setup to go long. We know that we're going to buy 1 tick above, but that is provided all the bars remain green. Now the next 2 bars remain green, but we still hadn't traded above at this point yet. And then look what happened. We had our first red bar and we hadn't entered yet. So all bets are off. We're not going to trade this. Why? Because the Pet D, that's our translator, is saying that the trend has changed. The market says it wants to go different, in a different direction now. So who are we to argue with it? We're going to go with it. All right, so now we're looking at 2 red bars. One is a down bar. The next one is an up bar, but it's outlined red. So you have the beginnings of a short-term downtrend, and in all actuality, you have a short-term downtrend. Not short-term down, a short-term 3-bar pivot low, because you have a low created by a lower low and then a higher low. But what is this bar? It's outlined green. Remember, we need all 3 bars to be colored red, so there's no setup here. All right, so now we start to get consecutive green bars, and then what do we have once again? A high followed by a higher high and a lower high. So that is a valid 3-bar pivot high. So now we know, once again, we have another setup, and we can go long ABMD if it trades 1 tick above, provided the next bars remain green. If we have our next bar colored red, all bets are off. All right, so let's see what the next bar did. Well, it traded up there and it's still outlined green. It's an up day with a green outline. All right, so we're in the trade. And 77 points later, okay? See, this was all done without the help of any volume, not looking at what the institutions were doing, not looking at any earnings reports or any fundamental news, not looking at support and resistance. We don't care about that. Why overcomplicate things? All this was done was by doing one thing, listening to the market. The market was telling us by coloring the bars green, it was in an uptrend. All right, so that's our first job as a trader. Listen to the market, see what it wants to do. Our translator said it wanted to go higher. Okay, our second job is simply to apply some structure so that we can enter. Our structure was the 3-bar pivot high, and that's it. Okay, obviously not everyone would take advantage of 77 points. Some people would say, well, I want to get out with a couple of points profit and say thank you. All right, great. Others would say, well, I can keep my money tied up a little longer. Maybe I'll take 10 or 15 points. Great. Others might say, well, I'm staying as long as possible. I'm waiting for the market to take me out. Great. There is no one right or wrong way to trade. You are in charge, not some guy sitting in a trading room or chat room telling you how to trade, not some master system. You are in charge. Our job as your educator is to provide you with exit points, with entry points, ways in which to listen to the market, stop placement points. Ultimately, we show you all the different variables, and then we work with you so that you can decide how you want to trade. Don't ever let anyone trade for you, whether it's a signal service, whether it's somebody on TV telling you what to buy or sell. That, in my 41 years, is a recipe for disaster. That's why most traders fail. Think of it, the entire industry is based off of you listening either to someone or something, some system tell you how to trade. It has all the answers, right? And if that were true, then why do 85% of all traders fail? It's because there's no consistency in that. It's because you have to make your own decisions. Don't take yourself out of the game. You are in charge of every trading decision and your trading destiny. We just show you the way. Now, the beauty of this is if you get a strong enough trend, well, guess what? There's another short-term pivot high. If you miss that, you can get in here. Or if you want to re-enter, you can get in and here. Let's look at another example, AMG. Okay, this was just a month or so ago, the beginning of April. Someone would say, well, Steve, how can I make a decision based off 4 or 5 bars here? Well, remember, keep it simple. You don't need all these things. For some reason, we've been brainwashed into thinking will make us successful. We apply the PET D, simply click it on in our strategy tab tool here, and it changes the colors. The first bar is green, but then we're followed by a series of red. And what do we have here? A 3-bar pivot low, and they're all red. Now see, even though this day is up, this is just an up day in a short-term downtrend. So this is, this is the beauty of the PET D. It will color the bars either inside red, inside the body red, or outline red, telling you that the trend is still down. So we have a 3-bar pivot low. We have this kind of V approach. So we know that we're going to go short if we trade 1 tick below. Now you notice I say if we trade 1 tick below, you do not need to close there. You do not need to close below that line. You can trade there and then close up. That's okay. We just want whatever we're trading to tell us that it went below that pivot low. So this is provided that the next bars in series of bars remain red. If one of these bars, if the next bar goes up and it turns green by the PET D, well, we're not going to take the trade. Why? Because the market, not some guy in a chat room, the market is telling us that it wants to go higher. So we're not going to sell anymore. But let's see what happened on the very next trade. Well, we had a gap down. We traded there and then closed a little bit higher. That's okay. We're in. We can either buy the puts, we can sell the calls, we can short the stock if we like. It's, once again, that's your decision, not ours. This is not a system telling you the only way you could trade it is by having some wild option strategy. If you want to, that's yours. You can do whatever you like. The point is, this should be looked at as a negative bias. You should be looking to go short this market. And it went down 20 points. Now, did we have any idea that it was going to be going down 20 points coming into the second week of May? No, we didn't know how low this was going to do. We're just listening to the market every day. It could have gone down 5 points. It could go down 50 points. We don't know. So it's not a predictive tool. It's simply telling you what the market wants to do on a tick-by-tick basis. All right, so let's look at some more techniques now and some more examples using, some more technique examples using the same technique. And these are going to be biased on the buy side. And then we'll show you some biased sell examples, okay? Here's DVN. Now, it looks like we're in a short-term uptrend, but we have to make sure, so we apply the PET D. And actually, there was a sprinkling of red bars here, one green, and ultimately, we started to get more green and we created this short-term pivot high. The bars remain green. We trade above, so we're long right here. And coming into the second week of May, third week of May, 9 points to the upside. Once again, if you missed that, there are a lot of more opportunities to get back in. How about Facebook, okay? Daily chart of Facebook. We were kind of going sideways to lower, and then we had a big gap up. We apply at the end of April the PET D, and we see that we were green here, had no setups, and then we turned red for a couple of days, and now back to green. And what do we have right here? A buy setup, and we would have gone long. Even though we closed lower, that's okay. We're in the trade, and 11 points coming into the 11th, 12th of May. How about TWLO, okay? Same thing, kind of going sideways to a little bit higher, but no real clear-cut direction. We apply the PET D and see that we originally had a series of red bars. Now, right here, we have a short-term pivot low. This was an area in which we could have gone short, provided the bars stayed red and we traded below. But did that ever happen? No, because the bars changed to green and we never got that low. So there was no trade setup. See, this is why we wanted to trade 1 or 2 ticks below bar number 2 in that 3-bar pivot low, to give us confirmation to get in. And so since it didn't, well, great, we didn't lose any money. The market decided it wants to go in a different direction. So now it changes to green. We have a series of green bars, and we have a 3-bar pivot high, high, higher high, lower high. So we're waiting for it to trade above, provided the bars continue to stay green. And it did on the very next bar. We got long, I believe about 38, 16 points to the upside coming into this past week, okay? Once again, trading is really simple if you just get out of your own way, all right? It's us as traders who make it more complicated than it has to be. And look at all the different times you had to get back in if you missed that first setup. PSX, all right, we talked about this, I believe, earlier. This is the way most traders trade. they're kind of looking for overbought and oversold tools. Well, here, all we have to look at is the PET D, because the PET D tells us what the market wants to do that moment. So we have a cluster of green bars, and we have a short-term pivot high. We have a higher high, and a lower high. So that is the area we want to enter. Right here, we're on 95, 24 points coming into this past week, okay? Once again, we have no idea how high something will go. We have no idea how low something will go. We're just listening to the market on a tick-by-tick basis, and if it tells us it wants to go higher, we're in. If it tells us it wants to go lower, we're in to go short. But we never buck the trend. This is the simplest way I know of for trading in sync with the trend. All right, here's an example in CHK. All right, I shared this example with you just to show you that this will work on expensive stocks and inexpensive stocks. This is roughly a $3 stock. Just last week we had a 3-bar pivot high. You see that here? And all 3 bars are green. So what's that telling us? It's saying that if the bars continue to be green, we can go long 1 tick above. And we did. On the 9th, you would have had a buy setup using this technique, roughly about 320, and the stock rose 50% in the next 2 weeks. Now, obviously, some news came out. Something happened to have this stock jump 50% of its value in just 2 weeks. Did we know anything about that? No, because it's not required to listen to news. And someone would say, well, why don't you listen to news? I said, because the market tells me in advance most of the time what it wants to do. I saw that 3-bar pivot setup, weeks in advance of this big move up. It had nothing to do based on fundamental news. It was only based on a tick-by-tick translation of what the market wanted to do. It was already telling me it wanted to go higher. So why should I wait for any news or anything to come out? Now, as I said, it can work on a $3 stock. It can also work on a $100 stock. This is a weekly chart of Netflix going back almost 2 years, about a year and a half, okay? Someone's saying, Steve, there's no way you can find out what to do based off just looking about 7 or 8 bars. Well, not really, because you click on the PET D and you see that even though it looks as if the stock is doing nothing, we have the majority of these bars green. And we have a 3-bar pivot high. High, higher high, lower high, and all 3 bars are green. So we knew that we bought once we traded 1 tick above on these weekly bars. So nothing changes because we go into a different time frame. So you would have entered to go long this on a weekly time frame in October of 2016, roughly about 105, 97 points you could have ridden into going into the next year, okay? Once again, if you miss that entry, lots more along the way. Now, here's a weekly chart of the Dow Jones Industrial Average. So you could use this as a market directional tool. You don't have to trade this if you don't want to. Remember, we're not here to tell you how to trade. We're just giving you the tools and techniques to help you trade. You can decide for yourself, and you should decide for yourself how and when and what you want to trade. Not me. I'm just giving you the information. So if you want to use this, some of our students say, Steve, this technique is not for me, but I like to use it on the indices and on ETFs to find out what they're doing. Great. You can still use it that way. For example, if you apply this to the Dow Jones Industrial Average chart on a weekly time frame, going back to December, January 2016, 2017, well, we had all the bars green, 3-bar pivot high, and check this out. Don't you think if we went above and all the bars remain green, don't you think that that's telling you the market wants to go higher? So if you were thinking about maybe getting into the market and investing, maybe you're thinking about selling. Well, if you saw that, well, you think, well, why should I sell when the market's telling me it wants to go higher? Okay. This is the beauty of this tool and the simplicity in which you can apply it. Now those were examples using an uptrending market. Let's look at downtrending markets, okay? Here's an example in CELG. Once again, we're only looking at about 7 or 8 bars. How can we figure anything out? Well, we apply the PET D and see at this point right here at the end of April, the bars started to turn red. And what do we have right here? A 3-bar pivot low. Low, lower low, higher low. So we know that we'll go short if we trade 1 tick below, provided the continuing bars are red. As you can see, the very next bar traded there. Did not close there, but traded there. So that's a sell signal, roughly about 84 and 10 quick points coming into this last week. Okay. How about WDC? Well, it looks like we're in a downtrend, but most people would say, well, Steve, the chat room I go to, I subscribe to, they say that this thing is so oversold. All the indicators are oversold. The institutions really like it at these levels. Why? Because it's major Fibonacci support. So you got to buy this, right, Steve? I mean, look at this. This is a major, bottoming formation here. Well, you see how you always want to make decisions based off what someone or something is telling you. Why not listen to what the market is telling? And the best way I know of how to do that is to apply the PET-D, because it's telling me on a tick-by-tick basis what it wants to do. My job is just to jump on board. Now, right here, it had a short-term pivot high, so I was going to buy if it traded one tick above, but it never did. And then the bars changed color, so all bets are off. But what do we have here? We have a 3-bar pivot low. So I'm going to go short if we trade one tick below. And remember, I can decide however I want to go short. I can actually short the stock. I can sell the calls or buy the puts, put together some type of spread. It's up to me. We don't tell our students how to do this. It's up to you how you want to decide. So we see here the very next bar, it traded below. So you're short roughly around 91.5, 92, 16 points to the downside coming into the first week of May. Okay? So don't ever let anyone tell you that something is oversold or something is overbought, because it just does not exist. Things can be oversold for months, years, as well as being overbought. Your job as a trader is twofold. Listen to what the market wants to do and then jump on board. That's how simple trading is. There's nothing else you got to do. There's nothing you have to figure out about the earnings. There's nothing you have to figure out about support and resistance. There's nothing you have to look at with volume. There's no earnings report. It's just don't overcomplicate it. Here's an example in GS. Doesn't look like anything's happening here in these 6 bars, but we see here that we have a 3-bar pivot low. Low, lower low, higher low. So we can go short if we trade one tick below. The very next bar, we just barely did this. So you're roughly short at 251. I know it's expensive, but maybe you bought the puts. But that's okay. 25 points to the downside in just 2 weeks. Okay. Another example of a weekly chart. If you like to use this for investing or for longer term investments, we see here that looks like on just off site that we kind of made a bottom and we're looking to curl back up, right? This is the way most traders would see this, where the institutions came in, the volumes pick up to the upside. This is probably a buying area right here, right? Well, what's the PET-D telling us? Not really. The short-term trend is still down. All the bars are red. And what do we have here? A 3-bar pivot low. So you want to go short if we trade one tick below. Now here's a little bit more advanced technique. Sometimes while you're waiting for that pivot low to be penetrated and all the bars remain red, you will see another pivot low being generated a little higher, as we see right here, 1, 2, 3. So if you'd like to, you can move this up to right here because it's still valid. And so what you basically do is use the same rules but at a different place, and now you go short right here, all right, which is basically 108, 109, and the stock dropped 50 points in just 6 months, okay? Now, did we know that was going to happen? Absolutely not. But the market told us as far back as September in 2017 that it wanted to go lower. We didn't know anything about earnings. We didn't know anything about the company. We don't know anything about the market. We just know that this particular stock wanted to go lower. That's all we're interested in. Why overcomplicate it? And if you missed that, lots more opportunities to get back in. Okay, so let's recap before we go to question and answer. Remember, for this technique, you need to apply a 3-bar pivot higher low. All right, explain to you what that is. If you want to watch over in the video, that we'll send you the link. Remember, a 3-bar pivot higher low is the structure you need to enter this particular technique. And then all you have to do is apply the PET-D. If you get a 3-bar pivot high, all those bars must be colored green. That's telling you that the high that we're going to exploit is generated in an uptrend, a short-term uptrend. If you get a 3-bar pivot low, all the bars must be colored red. Now, extremely important points to remember, because these are probably the most common questions I get. This is not a complete strategy. As you know, if you've heard me speak in the last 45 minutes, this is a technique. A technique is not a strategy. A technique is just one piece of the puzzle of a strategy. So the technique we shared with you today was the high probability entry point for spotting a high probability entry point. But we really didn't talk about advanced entry signals. What if you wanted to get a different entry point? What if you wanted to decrease your risk? We didn't talk about stop placement. You know, where are you going to protect yourself? I'm not going to tell you that this works 100% of the time. Nothing does. So where do you want to take the least amount of risk? Where do you want to take more risk so you can stay in the trade longer, give yourself some more room? We didn't talk about exiting. All right. Some of the examples I gave you could have generated, you know, dozens of points. Where would you have exited? Would you have exited with a 2-point profit, maybe a 20-point, maybe a 60-point? It's up to you, but we show you that in the courses. And then finally, we didn't talk about money management, okay? How many shares, how many contracts do you trade? So those are all important pieces of the puzzle you need for a strategy. All we shared with you today was this technique, but a very, very valid and important one. Now, as we close, I want to ask you a question. Where are we? We're in the month of May. We're already 5 months into 2018. At the end, in another month, we'll be halfway over. Do you think this technique can help your trading for the remainder of the year? Okay? Think of how you're doing. Are you anywhere near where you thought you'd be in January? Most likely you're not. It's just common knowledge. It's why most traders fail. We're promised certain things and we see that there's no consistency to them, you know, usually by halfway through the year. So how would you like to turn your trading around? By making your trading simple and by, for the very first time, feeling confident about your decisions. Well, here's the special we have for all the attendees today in our webinar. We're going to offer you our PET-D. That's the Primo Early Trend Detector. We're going to give you the complete course. Remember, this comes with 2 continuation trading techniques, 2 pullback trading techniques, a trailing stop technique. And remember, you can apply this to virtually any market, any strategy, and any time frame. We had a bias today just looking at stock examples, but you can apply it. I use it on the E-mini futures. That's where I usually use it because that's my market of choice that I've been currently trading on intraday trading. You can apply it to Bitcoin, futures, currency pairs. It makes no difference. This is our roadmap virtually for any market, any time frame, any direction. As we look at some examples here, here's a 4-hour chart of the Canadian dollar. You think you could have used this technique to apply, to use the same exact rules, but now we're looking at a 4-hour chart of a currency pair. That's to the upside. Here's a daily chart of the euro yen. Look how you could have taken advantage using the exact same technique we talked about. Now those are currency pairs. What about an hourly chart of the E-mini futures? Okay, we have a really nice move up here about a month or 2 ago. Could have taken advantage of that and potentially captured 55 points or over $2,700 per contract. That's an hourly chart to the upside. How about a 5-minute chart to the downside? All right. Obviously, we're going lower, but the market told us well in advance it wanted to go lower by coloring the bars red. All we have to do is simply look for the short-term pivot lows, and that was 15 points to the downside in just probably a matter of a half an hour. That's $750 per contract had you decided to potentially capture that. And remember Bitcoin, okay? This is a weekly chart of Bitcoin, and it was taking off coming into the beginning of the year. Do you think this technique could have worked? A lot of people are saying, well, I don't know how to trade this thing. Well, all you have to do is apply the PET-D and see that the PET-D had been coloring this green going back to 2016, 2017 beginning. And all you do is apply the same technique of the 3-bar pivot high, okay? So this is our roadmap for virtually any market. I use this on a daily basis. I was using it this morning prior to putting together the presentation today. All right, that's how valid it is. It's something I've been using going on 41 years now. We're going to offer it to you with a special discount. But we're not going to just stop there. In fact, we're also going to include the platform that generated all the examples today. This is our new PTS Primo charting platform. I designed this with Pro Trader Strategies. We're extremely excited about this because we feel it is the trading educational portal that you've been searching for. It is virtually 40 years of education, of strategies, of techniques, of methods, all put in one place and just so simple. It's one click away. Let me show you what's included with this offer. You're going to get enhanced buy sell line. That's a tool we have that virtually tells you the overall trend. Where the PET-D tells you the short-term trend, the enhanced buy sell line will tell you what the overall trend is in a matter of seconds. You're also going to get a short-term pattern recognition tool. This looks at individual bars and will tell you what the short-term trend is just looking at these bars alone. It comes with 2 proprietary entry techniques. So if you're having trouble with your entries, if you like your strategy you're currently using but your entries are faulty, you can apply these to any method, any technique, any system. It comes with a scanner, so you can scan for all these features on a nightly basis or intraday. over 90 technical indicators, free Bloomberg TV. We know that if you do have a fundamental bias, if you like to look at fundamental news, earnings, reports that are coming out live, all you have to do is click on our media page and a window will appear with free Bloomberg TV. And then finally, personalized tech support. If for any reason something isn't coming up, you don't know how to load a chart, our tech support will there to be, in a matter of minutes, to be there to analyze the issues and to resolve them for you. This is all included with the Pet D course. So we're going to give you 6 months free. If you become a member of our Pet D course, you're going to also get the PTS Primo charting platform, 6 months of it for free. It's a great, great offer. It's a great way to learn all of our techniques and methods right there, one click away. Now, let me share with you what this usually costs. Okay, the Pet D is probably one of our most popular as well as our most powerful tools. It can run close, just the course alone, close to $4,000 or $5,000. Here's what we're going to be doing today. We're going to discount that price down to $29.95. So if you want the complete course, a one-time fee, it's $29.95. But we realize not everyone can come up with one lump sum, so we're also going to offer a different option as well. If you don't want to come up with $29.95, we have a payment plan of $497 down plus $97 per month. But that's for a limited time only. I can't think of a better way to get involved with the Pet D, as well as all the information involved in the course, as well as 6 months free of the platform for only less than $500 down and then $97 per month. That is a really great offer, and we're only offering it to the attendees today. This is for a limited time only. Here's how to take advantage of this. Contact Pro Trader Strategies. They're my sister site. They handle all of our tech support, everything concerning the platform and our discounts. They have trading consultants manning the phones. I would suggest calling them and putting together that payment plan, okay? So you don't have to tie up all your money. There's no obligation to ask them more questions about a discount or anything else that they may offer you. You can call them directly at area code 310-598-6677. That's their phone number, and they have trading consultants manning the phones. Now, the link you see at the bottom will give you more information about this offer, and you can also sign up there for the $29.95 one-time fee. And that's not a live link, though, and if you look at the chat box, they have posted a live link there in the far right-hand corner of the GoToWebinar column. So all you have to do is simply click that on. It will take you there. So I'm going to leave this information up here, this screen. You can write down the phone number, write down their email, or click on the link in the chat box for more information. But I'm also going to open up the question and answer box. And I want to thank you for holding off on any questions before we begin. Okay, so let's see here. What strategy number is this? Well, remember, DT, this is not a strategy. I think I repeated this about 5 times. This is a technique. A technique is simply a piece of the puzzle to a strategy, okay? A strategy comes with anywhere from 3 to 5 rules: stop placement, entry, exit, money management, and that's a full-fledged strategy, all right? And then different ways to trade it, aggressively, conservatively. A technique is just a high probability entry point. That's pretty much what it is. So that's all we share with you today, okay? Now, also one other bonus I did mention in this is that we have 2 different variables for the Pet D. If you like to get in and out of trades quickly and enter more quickly based off of a fine-tuned Pet D, then you use our standard Pet D. If you'd like to stay in trades longer, if you like to capture as much as you can, then we suggest, it's not required because remember you're in charge, that we give you the option of using the Pet D slow. So we're giving you 2 different options, and that's it. Those are the only 2 Pet D settings I have known of in the last 30 years. Other than that, we have not changed anything. Okay, so those are we give you 2 different options. So it's up to you to decide. Some people like to say, well, you know, Steve, this is great. I only use the Pet D standard one because that works for me. Great, there's nothing wrong with that. Where others may say, no, Steve, I kind of like the Pet D slow because it keeps me in trades longer, and I'm the type of trader who likes to just hold as long as possible. Great. The only problem is when you're trading someone else's rules. But if you're trading something that meets your needs and you're in charge, that is what's going to make you a consistent trader, not me. I can only provide you with the tools and techniques. You have to make the decision on how you want to use them. And that's what we teach you in the courses so that it'll make it easier for you, okay? Other people are saying, what is the price of the platform after 6 months? That's a good question. I believe you probably have to check with Pro Trader Strategies. I think it may go less than $100. Maybe it could be that same $97, but I would check with them because they handle all of the pricing for the platform. I'm really excited about the platform because we're making changes all the time to make it easier and better for you. We're not changing or editing any of the strategies or methods. Those have been staying the same for years. We're just making things easier for you. We're adding different variables and options such as videos and different things on the screen so that you can really make it easy to learn. That's what we're trying to do. We're trying to educate you as an educational company. That's our goal. So we're trying to make things as simple as possible. So we're really excited. And once you have the platform, you will become privy to all these new and exciting changes that come up. So it's a great, great offer. I can't think of a better way to become acquainted with our work by getting 6 months for free. And then you're not locked in after that. Then you can decide if you want it or not. But I'm pretty sure, just based off some of the testimonials we've had lately, that it will, you'll most likely want to continue the platform usage, okay? I guess there's no more questions. They're pretty much the same. The last one was, is this being recorded? And yes, remember, you will all be furnished with a link to this recording, but please do not sit on this. A lot of our students have, what they've done in the past is they said, you know, Steve, I got the link. I waited for a week or two to listen to it, and then after I listened to it, I was convinced. Boy, I went and did the research, and this stuff really works. So I want to get that. I want to get that discount. And by that time, 2 or 3 weeks later, the discount is no longer in existence. So don't sleep on this. Don't wait to watch that link 2 weeks from now. You know, this most likely this offer is going to be only lasting 2 to 3 days, possibly maybe a day or two longer, but then that'll be it. By the time I present another free presentation next week, we're going to have an entirely different offer. So take advantage of this if this really meets your needs and this is something that you'd like to trade, okay? In conclusion, I want to say thank you so much. I use the PET-D on a daily basis. I use the same technique as well. It really works in any market, any time frame, in any direction. And when the market was falling out of bed this morning and before I started, it was working amazingly on a short-term 5-minute chart of the E-mini futures. All the bars were red and you were getting a series of short-term pivot lows. So go back and do some research. You'll see how easy it is to apply this, okay? Thank you so much for attending. I hope you become members of our PET-D course, but more importantly, I hope I get the chance to teach you as a student of mine, okay? Thank you so much. I will see you next time. Bye-bye.